Welcome to the March 19th, 2025 episode of The Energy Show. I'm energy journalist Markham Hislop, and today the working title of our show is Will Albertans Pay the Oil Industry's Cleanup Bill? And my guest is Drew Yewchuk. He's been a public interest lawyer who's been involved in this for years. I've interviewed him many times, so welcome to the interview, Drew.
Thanks for having me on.
Now, we get a lot of American viewers and viewers outside of Alberta who are saying, well, why do I care about this? So we need to take just a couple of minutes to explain why they need to care about this. And the reason is we saw a report come out in 2018 from the Alberta Energy Regulator, which officials later were disavowed, but it estimated the unfunded environmental liabilities at that time at $260 billion. And I dare say, because there were some things that weren't included, I just used the figure 300 billion. Because I think at that, once you get up to that number, there's not much difference between 260 and 300. And what we have now is a report from Dave Yeager, who is kind of Premier Danielle Smith's right-hand man. She appointed him to the AER board, and he's written a report called the Mature Asset Strategy. So we're going to talk about that in a minute. That's why you need, as a Canadian taxpayer, you need to pay attention. And Americans, you need to pay attention because all your US states like Oklahoma and Texas they all have similar problems. This is not isolated to just Alberta. And for Canadian taxpayers, you're on the hook because it won't be just Alberta that'll be paying for this stuff. Anyway, Drew, okay, maybe just kind of give us an overview of how we got into this mess.
So Alberta grows a large conventional oil and gas industry that is drilling holes, having pump jacks, and then they have a second oil and gas industry, the oil sands, which is mined up. Then there's sort of an in-between. There is bitumen that is using the steam-assisted gravity system pulled up through wellheads. But the steam-assisted gravity stuff has been classed with the more conventional oil in terms of liabilities. The mines have been treated as mines under a different system. So Yeager is worrying here about the conventional side. He's worrying about the drilled holes and the pump jacks, not the giant oil sands mines. But Alberta has a absolute fantastic quantity of
Yeah, it's
wells
really
that have not been sealed. It's 300 some, and I think 275,000 are classed as the mature ones, mature assets, as they're called in the document.
right. And there are 78,000 that are inactive wells that are basically, they're not pumping anymore, but but they're not reclaimed, and 101,000 marginal wells with a daily volume of 10 barrels or less. And so those wells will be inactive. They won't be profitable much longer. And 275,000 out of a grand total of 474,000 wells. 55-60% of all of Alberta's wells are problematic.
Yeah. So one of the first things that the new approach, the mature asset strategy, takes is the new category of mature assets, which we haven't really had before. The marginal wells are now being lumped together with the inactive wells and the abandoned but not reclaimed wells, which is sort of fair. They are wells that don't produce enough money to pay for their own cleanup. The ones that produce a trickle aren't really that different from the ones that don't produce anything anymore. But where that's not good is that the mature asset strategy is a plan for Alberta taxpayers and the Alberta regulatory system to be modified to provide public support in sometimes not very clear forms for handling these liabilities.
One of the things we have to explain here is how Alberta got into this situation in the first place. And folks, if you want to go to the Energi Media website, energi.media, and you look up on the nav bar, you'll see where it says unethical oil. And click on that, and then click on unethical oil part 2. And it's a long description of how, on the conventional oil side, oil and gas side, Alberta got into this mess, and you'll see my interviews with Drew in there. And a lot of the information came from his FOIP request, your Freedom of Information request, and you were very kindly shared those documents with me. It's mind blowing. And how bad the liability, the crux of the problem here is that when oil companies began drilling wells in Alberta, just like everywhere, the decision was made by the government to not take security at the beginning of the well's life. So you know that every well eventually is going to fail and have to be reclaimed, right? So you would think you'd put some money aside at the beginning so that it would be available. Maybe it was a bond, something like that. They never did that, and they didn't do it anywhere else either. And so consequently, they always thought, well, oil will be with us forever. There will always be profitable oil companies to reclaim these wells. It didn't happen. It didn't work out that way. And sometimes because of deliberate, can I say malfeasance? You're a lawyer, without getting sued?
I wouldn't say malfeasance.
Okay, I'm not saying malfeasance, folks,
Yes,
but but there's
because
a
you might get sued and not for any other reason. But for that reason, I would not say malfeasance.
okay, we're not saying malfeasance, but what we
Yeah.
are saying is liability dumping, where the big companies would sell exhausted assets or marginally producing assets to smaller companies, and which would sell them to smaller companies, and then eventually one of those companies would go bankrupt, and basically the asset, the wells and processing plants and so on would be thrown on the not on the always on the taxpayer, but it's kind of, and that's a whole other story. But anyway, there would be no company there to do the reclamation, which is why the inventory of these things keeps growing and growing. Now, on this mature asset strategy, Drew, when I was reading it, I mean, it sounded reasonable. It sounded like the government was trying to come to terms with a really thorny, difficult problem, and that this was done in good faith. Would you agree?
Not really. I'm less charitable.
Okay.
My read of the document is that because Smith selected for longtime advisor Yeager to do this, it comes from the perspective of an oil and gas lobbyist. And so the description of how the problem formed skips over the parts where the industry was very involved in convincing the regulator to make mistakes. Uh, and you can blame the regulator a lot, and I do, but there's a lot of evidence that those mistakes were not made with industry telling the regulator, "Oh, don't do this, don't do this," but the industry pushing for even gentler regulatory treatment. And so the mature asset strategy, which is sort of a discussion document, supposed to be a confidential draft that totally failed to be confidential. I don't know who released it to everyone, but a bunch of journalists got their hands on it, and I've been sent the copy several times. Um, uh, it to me downplays how much industry was involved in creating this problem and how foreseen this problem was. Because
And
you mentioned the liability dumping. It's been more than 25 years that the regulator was aware that that was a problem that they had to face.
let's talk about that because you showed me a document that actually, I take that back. The Narwhal, the online news magazine, had done a FOIP request and they posted the documents. In that document were some great graphs, and one of them showed that there was a new liability management regime that brought in around the year 2000, and there had been 25,000 inactive wells up until that time. Under the new regime, it was a hockey stick, and it went from 25,000 to 97,000 in like 20 years. And the only explanation for it is they took a bad liability management system, broke it into pieces, and had the inevitable consequences. And that all, I would agree that that all sort of gets glossed over.
Yeah. Yeah, and that gloss I think is there because it's trying to encourage shape the discussion towards industry really needs a break. Like we need to cut them some slack here. And I think that framing I do not accept that. That is not how this happened.
I would agree entirely. And you showed me some documents because you had correspondence from the AER that there was a particular engineer for a particular oil company who, because I don't want to get sued, I'm not going to name either one of them, but who was absolutely instrumental in drafting the regulations that turned into that poor liability management regime. I mean, and there are letters where they say, "Thank you very much. We couldn't have done it without this guy. I mean, he just basically came in and, fixed it all up for us." And so industry had a lot of input into that new regime, and then it utterly failed.
And one of the comical parts of that, which is exactly accurate to how it happened, is that that engineer who was so involved in setting up the system ended up being moderate. There were much more extreme voices saying that the approach that the regulator was taking was much too harsh on industry. And he would become a critic of the system later, sending letters saying, because he was associated with the larger oil and gas companies who were actually kind of worried that some of this problem would fall on their heads, as opposed to smaller fly-by-night companies who just, well, I won't be around at that point. I don't care. Him saying, you need to actually tighten this ship up. Like, this is turning into a mess. This isn't what I want you to do. Uh, so yeah, the regulator ended up mediating between big oil companies and really out there small oil companies, and losing sight of those are all oil companies. Those all actually share a lot of interests.
Yes, they do. And we need to go back another decade-ish to 1993 because there you again you had a presentation, a speech that was given to a gathering in Calgary by an AER management individual named RJ Nickel. And in it, he described very clearly how the government, concerned about these 25,000 inactive wells, went to industry and said, "We want to rejig who's responsible here." And so we have a list of 7 people in descending priority, descending order, who will be the responsible for that, paying for that well reclamation. And it started out with the licensee, the person who owned the well. Then it went to the company that sold them the licensee the well, and then it went down, and at the very bottom was the mineral rights holder, which is the Alberta government, right? So the government put itself way down the list, unlikely to get, but the ones that were really worried were the companies, the big companies that had sold the little companies those mature assets. And so what happened was the compromise was industry came and said, look, we don't like this system at all. We don't want it, but we'll look after those wells on our own. You set up this orphan well fund with an orphan well association. You put a levy on all the producing companies, and then will over time, we'll reclaim all these wells, not realizing that they were going to have 97,000 wells eventually, and it completely overwhelmed the system and nothing. And it was just a gong show, and nobody ever talks about it, right? It's because it's so complex. It's very hard to understand this stuff. So if I got it basically right, and where do we go from here, Drew?
Yes. So the organization that the industry funds to perform cleanup of wells that are left behind by bankrupt companies is the Orphan Well Association. It's had a few different names. The regulator has also changed form a few times. In 1993, I think it was the Energy Resources Conservation Board. Now it's the AER. It's a similar group of people. It just gets restructured every so often. But the mature asset strategy can be understood as a response to what the Orphan Well Association now risks for industry. There is a problem with the Orphan Well Association. The amount the levy charged to industry to fund the association every year is set too low. The mechanism for setting that fund is vague and does not provide a real guarantee for timely closure. But the Orphan Well Association's basic principle would be quite good, that in the whole oil and gas industry becomes and stays responsible for making sure these things get cleaned up. The mature asset strategy is them looking to renegotiate that term because now they see the size of the problem that is coming for them.
Yeah,
And
the tsunami's on its way.
yeah, looking for several different outs to change the rules to find someone else that's not the OWA to become responsible for this.
Dave Yeager and I had a conversation one time where I had explained RJ Nickel and all of that background on radio one day. And he was driving along in his truck and he said, I heard you say, I didn't know that. I didn't know any of that stuff. Well, now he knows it, and it still wasn't reflected in his report, which I found was kind of humorous. But we have a mutual acquaintance, Mark Dorn, who is a landowner's advocate, and he's an expert in administrative law around the energy industry. And I've been watching his tweets with great interest because he thinks that this is absolutely an attempt to shift responsibility from the industry over to the taxpayer.
And given, of course, that's what industry is going to do. It's private industry. If you run a business, the expectation is you're not going to pay for stuff for no reason. You're going to try to find a way to make money and avoid liabilities. The selection of Yeager, because of his long career as an oil and gas, both a hardcore oil and gas proponent and an oil and gas lobbyist, raises a lot of eyebrows. If there's something good about the mature asset strategy, I would say it's the inclusion of the rural municipalities, which I think have been probably slowing down these changes by saying, whoa, we actually don't like this new plan. We don't like this at all. And that is good. And that is something that previous regulatory changes, to the extent I've been able to get the documents, don't reflect. They did not get any seat at the table. They did not get any involvement before. I don't know exactly how much real control and influence they have, but they are involved now. And I think that is part of why the document does reflect some of their concerns. And that's positive.
Now, you and I have been talking about this for a long time, and we have been talking about it since 2022 when Danielle Smith became premier. Now, before she became premier, this is so convoluted, folks. She was a oil and gas lobbyist for the Alberta Enterprise Group. And one of the things she floated was this program called RSTAR. And it was a $20 billion program, but I guess because there were credits involved, the actual cost to the taxpayer to remediate some of these mature wells would be about, I think it was estimated about $6 billion of actual cash. And it was convoluted, but maybe can you give us a little bit of an overview of what RSTAR was and what happened with it?
Uh, so offhand, I don't think I can remember the details of RSTAR in great detail, but it was a reclamation credit where when an oil and gas company performed reclamation, the closure work of sealing a well and remediating it, they would be able to get a share of whatever they spent in a royalty credit, basically a tax benefit, so that they would pay less royalties and keep more money. So it would reduce their costs for performing reclamation and pass those costs along in reduced royalties to the taxpayer. So Albertans hated it because completely correctly they understood this was a way to give the oil and gas industry money to do work it had already agreed to do quite a long time ago, and that there was no reason that this change would, there was no good justification for this. Um, so it seems to have been scrapped. I doubt we'll see the name RSTAR again. I think
Yeah.
people hated it enough that they're going to rebrand. That's like one of the old smoking companies when they're Philip Morris is gone. Now they have a new name so that if you won't see that brand around again. But this is the continuation of that plan. The mature asset strategy is a continuation of the plan to find a way to not pay those costs.
Yeah, exactly. And my take on this, the strategy, while it seemed to address some of these issues, you could kind of see the government saying, okay, hang on a second, we were really upfront with the R-Star thing. That was kind of bald-faced, of us to do that. We're going to be a little less opaque or transparent this time, a little more opaque, and we're going to cloud it up with all of these different ideas. But at the base of it, I think, from what I can gather, is the problem here is whatever's being done is backstopped by the Alberta government. It's backstopped. And so that may not be upfront where the government is putting in money or credits or whatever it happens to be. But if there are shortages, if there are failures, if they're on and on, the government is the one who actually, in the end, pays the bill.
Yeah. And the mature asset strategy document that we have from January is a kind of a discussion document. It's missing a lot of details. It's got a lot of ideas that are missing parts. Uh, but there's definitely several parts in there that sound like there are ways to shift part of the liability or the risk that the liability is larger than estimated onto the public. And as you opened with the huge difference between expected liability and or the calculated liability the regulator believes is there and what they think might actually be the cost is huge. So those provide a lot of risk. There's something mentioned in the discussion document called closure corps and harvest corps,
Right.
uh, and a vague sense that they would get special regulatory treatment without an explanation of what the special regulatory treatment would be. Those both uh, raise gigantic red flags as soon as I see them. That's some kind of scheme that those would carry liability away from the oil and gas industry and leave the risk with the public.
There was a project called the Alberta Liability Disclosure Project. Mark Dorn was involved with it, and there were others. And they described themselves as nonpartisan, and Danielle Smith took a shot at them in the legislature and called them leftist, and kind of dismissed them. But they did really detailed calculations on the cost of all of these. And they came up, their numbers were a little different. I think it ranged between 70 billion and 100 billion, if I remember correctly.
Yeah.
But there was an idea in there that assets that still had value but belonged to a bankrupt company or company in trouble should be seized, and the revenue from those wells should go towards cleanup. Am I remembering that correctly?
Correct. And so that part slightly resembles what's called a harvest core here.
Yeah,
But
right.
The Harvest Corporation seems like it would not require a company to be bankrupt before the mature assets go to the Harvest Corps. And that part's unpleasant, and that they would get special regulatory treatment also seems like a problem because you could do something that looks like the ALDP plan directly through the Orphan Well Association. The Orphan Well Association
Right.
can operate wells that they end up holding. So why are they introducing this new layer of possibly private but specially regulated corporations uh, in the Harvest Corps and the Closure Co? Neither of them are described in enough detail to make sense as plans.
If I had to sum this up, Drew, I would go back to the original regulator that was created in 1938, and I can't remember the name of it. There's been five or six of them since altogether. And those original decisions, those poor decisions, in retrospect, poor decisions that were made then, not to take security at the beginning of the asset's life, but to just simply have oil companies pay them out of their cash flow, their revenue, down the road. That has built up and built up and built up and built up over decades. No government has ever been able to crack the code on this, and it just gets worse. And now we're at the point where it's kind of a crisis because one of the points that Yeager makes, and I did my first interview about this in 2018, is the incredible collapse of the junior oil companies. There used to be, I think you had a document that said like 700 of them. Like, there were a
Yeah,
lot in Alberta,
yeah,
and now there's well under 100. And these companies are small. They're having a lot of trouble. They can't get financing. No bank will give them any money. No investor will give them any capital. They're failing. And the premier makes all kinds of excuses like they can't get a reclamation certificate out of the AER, and that's the problem. No, it's because if you remember that link I sent you, Drew, to all of the production in Alberta. It was an AER, Alberta Energy Regulator link, and it had the oil companies, and then it had the gas companies, and the big thing there was a consolidation. Like
yeah.
most of the production now comes from like 10 or 12 companies. And tourmaline, on the gas side is huge. And then there's a bunch of little guys. And so the industry has consolidated over the years. And now the little guys and some of the medium companies that used to be fairly healthy are just they're just not viable anymore, and they're going bankrupt. And this has become a crisis for the industry and for the regulator and for the government and inevitably for the taxpayer.
Yeah. And the Orphan Well Association was set up on the assumption that the only people who would really go bankrupt were tiny companies, that small to tiny companies. And now medium and medium large companies have been going bankrupt since 2014, and that hits the system in a way that the Orphan Well Association was not prepared to handle and still is having great difficulty dealing with. The one that's at great risk right now is long run exploration, who had a planned buyer that fell through, and now they have entered a full bankruptcy receivership process, I think. So that's the next potential wave of wells for the Orphan Well Association already on the way. Um, and I lost the other point I had, so I think that's it.
Well, there's one I wanted to pursue, and that is the purpose of the Orphan Well Association levy, because there's a lot of there's a particular individual who used to own an oil company, and the company went bankrupt, and it went into the Orphan Well Association. And my viewers and readers give this individual the gears all the time. Why did the public have to pay for the cleanup of your wells? The truth is, they didn't. The Orphan Well Association is funded by the levy, which is last year was $135 million. So it is the industry paying, though there have been loans to the Orphan Well Association, but those are being paid back. The only outright gift that I'm aware of is the $1 billion in Alberta anyway, that the federal government provided as COVID relief.
There
And
has been non-loans pushed to the Orphan Well Association in a couple hundred million in the past. I don't remember exactly which years. And a lot of the loans come with very charitable interest. So there is an amount of money, public money, already given to the OWA that's pretty considerable. I know Martin Olshinsky did the calculation a few years ago. We should redo it again next year or something and see where it is now. There is then that what I think came out to 825 because some of the money was returned, 825 million in federal money. That didn't go directly to orphans, but because bankruptcy receivers were able to access it in some of the early rounds, some of it basically did. So the public has already paid a share of the cost for this. There's still the risk that a lot more of it will fall to the public. The other point that I had was you were talking about the junior companies. One interesting thing in the mature asset strategy document is that it identifies a distinction between oil and gas, and it says it is the
right.
dry gas producers who are the smaller and medium-sized dry gas producers who are the most bankrupt and the most imminent source of a lot of new orphans.
And
And
we could, sorry.
that's interesting.
It is. And we should just point out for some folks who aren't familiar with that, dry gas means all you're producing is gas. Whereas associated gas is you produce oil and you get gas with it. And those are the lower cost production. And because gas prices have collapsed, what are they now? $2? Uh, it's
Not
probably, yeah, it's still pretty low, I think. And so that's why these little companies are having trouble. Well, let's wrap up the conversation around the mature asset strategy because I have one final question here because I this is a nagging suspicion of mine, though I'm not sure that I could prove the argument, and that is the oil industry is under tremendous pressure from investors. A few years ago, it was like, oh, we'll give you 75% of our free cash flow back, and that'll keep because they were demanding. Investors said, look, man, you guys have underperformed. We want money back in the form of higher dividends and share buybacks. So they said, okay, we'll give you 75%. Now I hear it's 100% because they're having trouble accessing capital. The capital they can access comes at a higher cost. All of that is big deal for these guys, and they are looking to get out from under costs everywhere, right?
Yeah.
And so that I suspect has a lot to do with why suddenly this is a crisis and the government has come up with these, new solutions is the industry needs some of that off its books, off its financials, and shift it on to the taxpayer. We need to socialize that cost to make the oil industry more viable. Is that a reasonable hypothesis?
Yes. And the intermediary step looks like it's those not very clearly defined harvest corporations and closure corporations, which will have special regulatory treatment, whether they're even private or public or how they exist is not that clear. That seems like one of the most threatening parts of the document. There's also they mentioned changing uh, Companies Creditors Arrangements Act and like the bankruptcy process. That's federal, so it's not easy to see how they would be able to do that.
Right.
Uh, they can change liabilities regulation in Alberta, which interacts in some ways with that process. That could also be quite threatening to the Orphan Well Association and ideas that the polluter is going to ultimately pay. That's most of what I think is there is. That's the biggest concern with the document, that it's that same plan again.
Right. And because this is the first time we brought up the polluter pay principle, which is very simple. It's just as it sounds. If you pollute, you pay. You pay to clean it up. And here in Alberta, the while it still gets lip service all the time, it's not been the case for a long time. And people like Mark Doran are saying the laws are in place, the principles are in place. All you need to do is enforce them, and you can fix all of this. And it's the trying to get around it and trying to shift the cost somewhere else that is a big part of why this is up to now has been an intractable problem.
Yep. And there's an enforcement problem. There's a good administration problem that has also been lacking because of a lot of different problems within the regulator over the years. Uh, Something else that is in the mature asset strategy is that Jaeger seems to be taking seriously instructions from Smith that they want to double or seriously increase oil and gas production. And so there's also a focus on squeezing these mature assets, trying to get every last drop out of them. And that is hard to square realistically with issues about climate change. Why are we putting in as much investment as possible to squeeze every drop of gas out? Like I'm not sure that part of the plan that part of the plan is almost as weird as the other part of trying to get the liabilities passed on to the public.
I take a different view of that. And that is the energy transition is going to lead to structural changes in global oil market demand. So and the reason this is relevant, and I'll be doing an energy show about this hopefully tomorrow. I plan to do it today, but other stuff came up, and that is yesterday, 14 oil and gas companies and pipeline companies sent an open letter to Prime Minister Carney, and they, for the first time in my memory anyway, they laid out their vision for the future, and it is basically OPEC's vision. It is that we're not entering an age of electricity and the age of oil is dead. We're entering a golden age of oil. And the global south, which has been, emerging economies, poorer economies, is going to soak up all of this oil and gas. And oil is not only going to not peak and fall in 2030, it's going to grow considerably out to 2050. That is the way Danielle Smith thinks. I wrote 2 or 3 days ago, I did a show, and it was called How OPEC Ate Danielle Smith's Brain. And I explained all what OPEC is doing and where their assumptions are and all of that, and why frankly, I think they're wrong. And the industry basically came out and said, we believe the same thing. We believe exactly the same thing, and they want the federal government to streamline regulations, get rid of the industrial emitters tax to lower their costs, and let them just produce as much as they want. As much as they want. Just flood the global markets with it because they think that there's unlimited growth coming. As taxpayers and citizens, we want to have very, very careful consideration of that. Very. And so within that broader context of what the industry is doing at the national level, the mature asset strategy then takes on a whole different significance, doesn't it?
Yeah. And I think you might have said that we disagree, but I think that's right. That is how this lines up. And there's a mention of something like climate change here in the draft, it just has one bullet point listed as the significant external pressures on Alberta oil and gas. Widespread belief that oil and gas resources are an existential environmental threat. And I think that way of framing it, instead of saying, well, the problem is climate change, the climate change is real, and that's a problem for the oil and gas industry. That is what it is. That's real. What the document is the problem is that people seem to believe in climate change. And if only we could get them to stop.
Oh, but to see, that's where this open letter, you must read it.
All right, I'll find it right after this.
Yeah, you can go. Viewers, I will put a link into when I do the show on it. I'll put a link in there, and you can read it yourself. But what they're saying is that the world is retreating from climate change. They're retreating from the ESG um, filter for investments, environment, social, and governance.
Yep.
That's restricted capital flowing into the oil and gas industry. And the industry is saying that in the face of overwhelming demand from the global south, that we're all kind of energy security and energy poverty, solutions to energy poverty have now trumped climate concerns about climate change. Oil and gas is back, baby. That's what that letter says. And the Canadian producers want to be unleashed from regulations, from capital access, from old obligations. They want to be unleashed because they see the biggest opportunity of their careers coming up. That's that's the philosophy, the worldview behind it.
Yeah.
And I disagree. And I'll explain all of that in the next energy show.
Yes, and even that attitude definitely is the attitude of the U.S. administration, and that's a problem for the Canadian oil and gas industry in a big way because last time the U.S. administration just said frack everything you can, squeeze every oil a drop out of the United States, it crushed natural gas prices, and that was part of what accelerated all the problem that we have in Alberta. So if the US is really doing it, and it really seems like they are, that's not going to, the golden age of oil and gas will lead to a huge oversupply and a huge drop in prices. So we're going to have problems. We have problems now, and they're going to keep getting bigger.
And I'll leave on this note. The biggest problem we have, okay, we described the OPEC worldview, what we call the oil and gas forever worldview here at Energy Media. It's one thing for Alberta to believe that, but what we're starting to see signs of is that Prime Minister Carney maybe believes that, and maybe some of the premiers who were previously in provinces that opposed pipelines, they believe it. And I'll tell you folks, you can go back and watch that show I did, OPEC eating Danielle Smith's brain, and I will point out the erroneous assumptions in their modeling that led to that lead that underpins their worldview. And it's an eye opener, and you need to know that to understand why Smith is wrong and the industry are wrong. Anyway, Drew, this has been great. Thank you very much. I have no doubt we're going to be talking about this in the very near future, so we look forward to having you back.
Terrific. Always nice talking to you.
Thanks for watching the show. We are on a mission to reach 10,000 subscribers and over 1 million views. If you're enjoying the content, give us a thumbs up, share your thoughts in the comments, and subscribe to our channel. Thanks for being part of our community.